Welcome to Bitcoin Escape Plan. Bitcoin was on a massive uptrend until a key area of resistance broke down the chart. In today's video, we're going to go over the key levels that let us know, are we continuing this trend or are we about to see a major reversal happen? Later on in the video, we will go over the higher time frame context so that we understand what's happening over the course of months instead of just days and weeks. And then at the very end of the video, I will go over the best trade setups. A lot to cover in this video. If you are new to the channel in general, check out bitcoinescapeplan.com. Every Monday, that means tomorrow, I will be releasing an in-depth analysis that just breaks down the price across timeframes, makes it a little bit easier over the course of the week, just to know what levels are most important. bitcoinescapeplan.com. And of course, you can subscribe here on YouTube where I release videos every Sunday, Monday, Wednesday, and Friday. Let's get into it. So, first most important thing that has happened in recent memory, this is the downtrend from 126.2K in October. Super important. This is the first time we have had an interaction with this, I believe, since like January. Let's see. Yeah, all the way over here in January is the last time that we broke this trend line. So as we've talked about in other videos on the channel, what we are expecting is price will continue out here until it ends up breaking this blue line and then trends downward. Again, we'll go over that in the higher time frame analysis a little bit later on. So that's the most important thing. We broke that. We broke below it. As you can see, we kind of did something similar with this blue trend line. This is from the 59.9K bottom over in February. So we're uptrending from that and downtrending from the high in October. We have had more of a significant break for this one, so there's a possibility that we snap back up to it. But essentially, that's what we're waiting for confirmation of. Is this the only test that we're going to get on this trend line, or are we going to get magnetized toward this trend line for a short period of time? Before, again, my estimation is once we get to April 23rd, April 24th, I do think we're going to start breaking down to the opposite side of this trend line. Now, what other points of evidence do I have for this? Now, anyone who's been following the channel for any period of time knows I never shut up about 73.8K. I talk about 73.8K all the time. It's easier to see on the higher time frames, but that's the 2024 March peak for Bitcoin, which at the time was the first time in history that Bitcoin created a new all-time high that early in a halving year. That had never happened before. Super important psychological level. The price literally bounced right off of it. I believe this has something to do with the Straits of Hormuz peace talks falling apart. That's what actually caused this downside volume. And then it's a little bit too early for us to see if it's going to continue to result to the downside or if we are going to get a sharp recovery here. Again, we'll look at the higher time frame to see what evidence we have for that. There is some evidence that we're still okay at the moment, in my opinion, where we don't really need to get out of our bullish bias. Really, I think until closer to April 23rd, April 24th is where I would be much more concerned where it is relative to this trend line. So the other important thing would be this guy. This is going to be a crucial level that tells us whether or not we have support or resistance. Now, if you're already subscribed to the channel, you know what this is. This is the downtrend anchored VWAP. I'll put the little course thing over on the side here if you want me to explain what that is in more detail. But basically, this is the same thing as this guy. They're both drawn from the 126.2 all-time high in October of 2025. And it's just basically telling us what happens when the price behaves relative to the bands. And in that instance, that is the bottom band. The middle band is at 83.7K. So theoretically speaking, if price can continue to close above this, it will pull towards 83.7K. Now, I do not believe that it gets there. I think that we stop closer to 80K, if indeed we can get there at all. With the peace talks already falling apart after supposed to be for 2 weeks, I think it lasted for 5 days. That's not a good sign for us actually being able to get to those higher time frame targets, which again, I'll go over a little bit later. And that's kind of it, locally speaking. I'll release many more videos before we really have to worry about this blue trend line or the middle band of the Elder VWAP. For the most part, this would act as we would expect in this instance, if we're still bullish, this would act as support. And quite frankly, I don't think that we get there at the moment. Since that's currently at about 68.5K, 68.4, I actually would assume what the price is more focused on right now is confirmation between the 73.8 all-time high in March of 2024, the ETF all-time high, and 69K, which is the 2021 second all-time high. So psychologically speaking, those are kind of the two, like people who bought into that and then watched the hysteria of price getting to that point. You know, that's kind of the psychology that we're dealing with in the market at those levels. Is there's a lot of people who have Bitcoin at those levels. So a lot of people who have it considerably lower, a cost basis of below 30K. A decent amount of people in the 40 to 44K, which I believe is important. We'll talk about that a little bit later. And then we still have a significant amount of volume that is of people who have a cost basis of 82,000 or higher. So really what I think is going to happen, and I say this all the time, is I think as we get this last little rise higher, depending again on how high it goes, I think it's going to pull on the conviction of all of these individuals who are going to have to decide, do I want to buy more of this Bitcoin thing, or am I going to try and just take a slight loss and buy more Nvidia? You know, like that's what all those people are going to have to do. They're going to have to look at how gold is recovering and doing okay, how their real estate is still recovering and doing okay, and they're going to have to decide, do I want to keep in this asset that's not performing the way that my manager told me it was going to, you know, this risky internet coin, you know, like that's who these people are. That's who those people are, is not people who like deeply understand it or are self-custodying or even just holding Bitcoin itself instead of IBIT, MSTR, or some other derivative of the Bitcoin. So what we're looking for at the moment is we need a retest of both that trend line and the 4-hour SMA. The 4-hour SMA has started to curve. If it starts to drop lower, it makes it easier for us to retest it, but it does not necessarily make support more reasonable at those levels. So unfortunately, we may need to accept that the highs for this level, or this range rather, are already in. Like that's possible that has already happened. That this first break of this was a high of 76K, that might actually have been the highest that we're going to go in this little range here, and that we're done. We were hoping for one more slightly higher high towards 78, and it could very well happen, you know, that again, all it takes is like one piece of news to just shoot the price right back up in the opposite direction. Unfortunately, that's the nature of a supply and demand asset, is sometimes there's liquidity for it and sometimes there's more fear than there is liquidity, and people need the liquidity to do other shit. It's, you know, it is what it is. It's a 24-hour asset. It's going to sell off when people are fearful. Like that's a feature, not a bug, as Michael Saylor would say. So that's the most important thing we got to pay attention to on the 4-hour timeline. It's a retest at around 72.3K. I think that that's okay. We're going to take a look at the weekly and monthly about why that is not really that big a deal and we're okay. So I talk about this level all the time. Right about here at roughly 70.3K. As you can see, that's where these candles closed initially after that first drop into this range between 76.2K and 64K. I talk about these all the time. I feel like a weatherman. 50% of that range is that 70.3, or roughly. It's not exact, but roughly around there. So what I've been saying is every time that we close above that, it makes it more likely that we can get a push towards 76.2K. However, every time we close below that, it makes it increasingly less likely we can get a push towards that instead of favoring another push towards 64K. So we are again currently above that 50% mark. Even a close here at 71.1K would be regarded as bullish on this time frame. You know, would not be regarded as an inherently bearish thing, in my opinion. Now, most of the other people who I watch, I don't see them talk about it like this colloquially, like they have more specific targets and ranges that they're looking for in mind, but I think it's a pretty good rule of thumb. Price has been here since the end of January. So it spent a long period of time, 3+ months in this range. So I think it's quite reasonable to just chop that range into 3 or 4 parts, essentially. And we've spent the majority of it in this part, unfortunately, down here closer towards 64. So again, it puts more pressure towards 64 over the long term, the more weekly closes we get below that 50% mark. So again, because we are above it, that's a good sign. That gives us the possibility of, if something changes next week with the news and the liquidity is able to pump, we might get at least towards 76.2K. And it is still my opinion, broadly speaking, that we're going to see this weekly SMA continue to drop. It's currently at about 78.5K, slightly less steep of a decline than it has been, but still below that 80K pivot and on its way to the 76.2K pivot. Why is that important? Because historically speaking, if we look back, this is 2022, what do you notice? This is the weekly SMA, we've lost it. We make another attempt to it, we fail it, we make another attempt, we're able to break it, we find resistance at a Fibonacci pivot level, and then continue to fail. And then what happens? We have another attempt, we fail for a long period of time. What about 2018? Is it the same? Oh, look, it is. We fail it, we make another attempt towards it, we fail it, we break down for a long period of time, we break back above it one more time, and then fail it, continue to fail it. And it takes a long period of time. We should not expect us to be comfortably above the weekly or the monthly SMA. The monthly is even worse, by the way, until we get to sometime next year. So on the monthly, we typically will expect a period of 7 to about 13-ish months where we are below the monthly SMA once we have broken it. Now, the one thing I will say is good in our particular instance right now is the monthly SMA is still sloping upwards. It's actually rising, which is uncommon for this part of the cycle. Typically, we would expect it to be on its way to dipping shortly, or in this instance, in 2018, it did just continue to rise pretty much that entire time. So I do think that this is a possibility. Who was the president during this time? Donald J. Trump. Who's the president now? Donald J. Trump. So I think that there is a possibility that we're going to expect more volatility where, narratively speaking, this will be 100K this time. So what I would expect if it were going to play out in a similar way is we have a lower high into April, May, as I've talked about many times. I do think that it's more likely on, like I said, probably before April 24th that we see this one, just because we're very far left translated compared to where we normally are in cycles at this point. Like we already started our drop a long time ago. So that is still my anticipation, is that we're going to see that high form sometime between now and the end of April, essentially, and then start to drop down, get one more lower high in June, July, and then same thing, continue to break down. Now, again, this is the monthly SMA for 2018. However, it did not touch it until October, August of 2018, compared to now where we broke it in October of last year, November of last year. So there is a possibility, again, that if we're looking at this from the terms of it recovers very quickly on the monthly SMA, then we would expect another 3-ish, maybe 4-ish months being below it, which means that the price in the next 3 or 4 months cannot get higher than 90.4K. Now, again, even in this instance where we are retracing 2018, it ends up going back below the monthly SMA again, even before the COVID spike. Obviously, we could not have anticipated the COVID spike unless you were, sitting every night and looking into the shipping harbors and realizing, oh, wow, they're getting backed up. You know what I mean? Like, it's like not common for the average person to have seen that from their grocery orders and stuff like that. It did not become apparent until a little bit later on. But that's still what we could assume, is that the price would trend back towards that monthly SMA. And even if we just use that as a heuristic, like, what does that mean for us? So what that would mean is we would expect maybe the bottom is already in, and if we are just going to slowly start climbing towards this monthly SMA, what that means is I would expect price is still going to have trouble at around 100K, more specifically at around 106.8K. If you've been following me on Threads for any period of time, I talked about 106.8K all the time, like during that time period. That was a super important one to me. And I think just tells us a lot about how the price is going to move in the future. And that's what I would anticipate in that particular instance is sometime in next year, 2027, we would see a rise at least to this 96K pivot, but if it is able to break, probably going to touch 100K briefly, and then we would expect it to start to fail back again towards the monthly SMA. Now, the monthly SMA could, of course, rise that entire time. It could start to flatten out. If we are to assume that it's going to flatten out but steadily rise, then that's kind of what we would expect, is the price would go a little bit higher, and then it would break and chill around 96, probably for a while. Between 90 and 96 for like the second half of 2027, essentially. And then we wouldn't really expect it to go much lower, which in this instance makes spot buys in this area very smart. You know, and I have seen a lot of people who that is what they believe. They believe that we're about to see it rise again, and it's not going to go down to 44 and lower like everyone anticipated, myself included. That is still, like, for me, the lowest I can believe it will go is 34 to 39. Obviously, I don't have a fucking crystal ball. I don't know. Nobody knows. Anyone who tells you that they know, they don't know. You know, what the price tells me is that it can at least touch 44. That, again, will be predicated upon, do we fail off of the 76.2K pivot, and does that launch us right down past 64K? So really, that's what we're looking for at the moment, is how does the price behave when it retests the weekly SMA. Historically speaking, we do not have any precedent for this time in the cycle randomly breaking back above the weekly SMA and staying there. Now, for a few weeks, it can stay above it. Maybe 2-3 weeks, it could stay above it. But then historically speaking, it does continue to fail, typically at that moment. So there have been some changes with the Clarity Act. I believe that they are moving forward with no yield on stablecoins, which is not good for crypto companies, but they're going to take whatever they can just to pass this bill so that it is easier for stablecoins to flow into the markets. But I don't think that that is going to be, you know, the huge amount of liquidity that people are expecting necessarily. I've seen other channels talk about how prices potentially about to go over 100K again. And again, the only instance I can believe that is if we're cookie cutter copying, pasting 2018 to now, then technically speaking, that is possible. I don't think that we're really seeing that at the moment, though. Like, we are, again, at this point in time, we would just be breaking the weekly SMA in 2018, or not even. I think, like I said, it was like August. So we would still have been above it this whole time. Whereas, again, we lost it in October. We've been down below for a long time. And during this part of the cycle, it is more common that we expect it to continue to fail it rather than to randomly break above it. Let's get into the trades. So I was in profit after being in loss for 3 weeks. I'm now back in loss. I'm not really that concerned about it. It's like $30 in loss. And it's kind of the same story on the daily time frame as the 4 hour. We're pretty much just waiting for a reaction to this downtrend anchored VWAP, or in this particular instance, the daily SMA is actually higher than it. So again, we would expect that to potentially form as support before even needing to touch that. And it's the same thing. You know, this is going to continue to flatten and drop lower. But it's the same thing. As long as we continue to get closes above it, technically that pulls the price towards the middle band, which again is like 83.7-ish K. Now, obviously, there's nothing really preventing it from just continuing to drop down other than, like we said, those psychological levels between 73.8K and about 69K. Those are the two really important ones in that region. So, you know, what would invalidate this trade for me? I'm inclined to wait because I, quite frankly, deserve to lose money on this trade, period. I've said that a bunch of times now. I deserve to lose money on this trade. I entered it correctly as a short, and then for some reason, I can't even tell you why, decided to flip it. I thought that we were going to make that run towards like 76 to 80 plus K right then. I was wrong. Should have listened to the chart. my short would have been very nice, like 100 or 130%. And pretty much what I've done instead is a couple of instances I've added to the position, so that my cost basis can be considerably lower. I believe down here at like 72-ish. So technically, what I should be thinking about at the moment is, do I add one more contract here and then off of this potential rise? Because again, theoretically speaking, this is a break of the 4-hour Bollinger Band on the bottom. So again, anyone who's familiar with this strategy, you already know we're looking either for a break of the top Bollinger Band or a break of the bottom Bollinger Band. A break of the bottom Bollinger Band technically indicates a long. A break of the top Bollinger Band technically indicates a short. Now, probabilistically speaking, that may just be a very quick scalp, not necessarily a longer term short, but a lot of times it does work out that way, where if you are willing to be patient, the 4-hour entries I think are just cleaner than the other time frames. There's a lot of instances where you can be wrong for like a long period of time on the daily, and if you have to wait for the weekly, there's just like you're going to take 4 trades a year, like you're just not, which might sound really nice to you, but I don't think it's as reliable as the 4-hour just presents more setups. You just have to be prepared for it to be a 1% scalp or a 2% scalp instead of, like, again, I was perfectly primed for that like 130% move, but that doesn't happen every day. Like that's not always what you can be expecting. So I'm trying to find a balance personally between positions I stay in for a long time versus, do I just want quick exposure to a 20% move, which I'm leaning towards. I think it's better to just do the quick moves rather than holding, because then you risk, like this is already like, that's almost a 40% trade. Like you kind of risk having to sit around and wait rather than being able to reliably make money off of it. And in theory, the whole reason why we're trading, and I haven't even said this in the video, but again, for anyone who's subscribed already, you know what I'm talking about. I'm talking primarily about the Nano BTC perpetual contracts on Coinbase that you can trade 10x leverage, and all you're doing is trading exposure to Bitcoin in exchange for US dollars. It's awesome. I love it. It's already become my favorite trading vehicle. But again, we've had multiple instances in the last couple of days. I hate you, Sticky Keys. Do what I need you to do. I hate you so much. This is another one, a little bit more than a 20% trade. We're talking about a day and a half. 36 hours. You're in that trade. You're making 20% of your money. And then 2 days later, you get another opportunity to do the same thing. So I'm increasingly thinking it's better that way, as opposed to this guy would not have been an obvious entry. Obviously, it's a great entry, but it would not have been an obvious one on the chart. This is slightly more obvious. Same with this. I mean, those are off of a trend line, so I refer to the Bollinger Band breaks as like a gold star entry, but this is pretty damn good as well. This trend line should technically be a little bit lower. I'm just lazy and I'm leaving it where the candles closed instead of where the wicks went to. And that will be important moving forward, I think. But me personally, I haven't seen enough evidence that we are actually going to continue to drop lower. Again, I would think that that's probably going to be that 70.2K level, where again, it's not a psychological level. It's more just a math fundamental level. Like just fundamentally speaking, if we're able to close above that, it allows for upside pressure towards 76.2K. Whereas if it is dramatically below that, then it requires a candle like this to get to it, which we can't always assume that that's what we're going to get out of a week. We're more likely to get one of these guys, to get chop. Not every candle looks like that. Now, there are a significant amount of them, but if you notice, they're mostly red. They're not green. So we shouldn't be expecting massive green candles to the upside just out of nowhere. We got to be more realistic about what we can anticipate. So to round out the video, what we're looking for is a close above 70.3K on the week. However, that is still going to pull this weekly SMA down. Again, I'll give an update in the newsletter tomorrow as well as Monday's video. about wherever this weekly SMA ends up. But that's still our baseline assumption, is that we're going to make an initial rise into this, and then we are going to fail it. That is typically what we would expect is going to happen at this part of the cycle. So I will be updating you, like I said, 4 times a week: Sunday, Monday, Wednesday, Friday. Make sure you're subscribed. But that's all that we really need to be concerned with at the moment. I don't think that we're quite invalidated yet for this uptrend. That will become more apparent, I think, after another reaction to this Fibonacci pivot. It's about 71.6K. In the short term, that'll be important. If that forms as resistance there, obviously going to push the price down lower. But if we're able to show some strength there and then get above this weekly SMA, or 4-hour SMA, sorry, that will allow, one more attempt towards 78 or 73.8. I will say that us failing right at 73.8K is not good. We really do not want that to continue to act as resistance. The longer that we see that act as resistance, the more likely that we've already seen the highs and are just going to continue lower. So that's what I would keep in mind. I will see you tomorrow, my friends. Adios. Have a great day.